Hello and good evening, traders. 13th of September 2021, 8:30 p.m. Indian Standard Time. And we have yet another Doji on the daily charts of the benchmark Nifty near month futures. Closed at 17,359. It was fairly, though within a limited range, but fairly volatile throughout the day. Fell as low as 17,264, which means it broke below 17,300 one more time just to bounce back. Ends at 17,359, completely flat, and you can very clearly see on over the last 5 trading sessions, the average range of the index has contracted significantly. Existence of couple of dojis, hanging man, spinning top. So it's essentially the markets the index lacks momentum either on the upside or that on the downside. In other words, lack of follow through buying or lack of follow through selling. This is not a bad sign for the bulls because the underlying trend, short term, medium term, long term, they're all in an uptrend. We have experienced wonderful momentum over the last few months. So even if it's buying time to consolidate before the next rally, it should be completely fine from the bull's perspective. Now, if we take a look at the lower time frame, this is the 75-minute time frame, and I have this blue line which is close to that 17,300 because that's where we had the first dip last week, and today we had one more. This was the opening bar of the day, and throughout it just dragged itself up to close completely flat. Now, a sustained close below the 17,300 will only imply that yes, the market's ready to probably correct further down 17,100 or maybe psychological 17k mark, who knows. But until and unless 17,300 is broken confidently and the close is sustained below it, one should wait out. Upside seems to be slightly capped. The index has managed a range for itself, and the obvious levels to look for is the 17,400, 450 kind of range. There's no rocket science in the overhead short-term resistance, but the important thing on the downside is the index should close below 17,300. Now, to figure out the reason why the index is not going anywhere, you can take a look at the right hand side over here. These are the sectoral indices in today's trade, and it seems to be a fairly divided. We've got media, metal and IT which were positive, but the issue, the problem is essentially over here, wherein we see private sector banks, bank nifty, PSU banks. Now, I keep on saying this pocket has the maximum weightage, and so bank nifty posts a 0.5% correction today, and which was primarily led by stocks like ICICI and the other private sector banks, barring Kotak. PSU banks kind of flattish. SBI is trying to hold on to itself, but overall this pocket is still not helping the index give the breakout. It's not a weak chart, it's an uptrend. It's going through a consolidation correction, so it will definitely pick up on the upside. But the important thing is for the bank nifty over here, which is at 36,576, to give us at least a short-term breakout above this 36,950, 37,000 kind of levels. In itself, the banking is also fairly divided. In fact, if you take a look at the top stocks in today's trade, you'll find iBank and HDFC Bank amongst the top losers within the top stocks, that is. And HDFC Bank has slipped, at least on an intraday basis, below the previous swing low. ICICI Bank, if you take a look, has closed significantly below the swing low. So these charts are showing us clear signs of a short-term correction, where on the other hand, Kotak Bank is one of the biggest gainers. It bounces back handsomely from the low of close to 1800. Reliance was, of course, one big contributor on the downside in today's trade, over 2% fall, and closes fairly weak. It's not that it managed a bounce back in the later half of the day. So when you look at the sectors, and when you look at the top stocks, it gives you a sense of a divided market. Stock specific movements are happening, but it seems like the market needs to buy some more time. So bias should be positive because the underlying trend is still up, but one should be careful. If you take a look at the global markets right now, close to 8:35 p.m. Indian Standard Time when I'm making this video, the SGX is trading 34 points higher. It's close to that 17,410. The Dow Jones Industrial Average is up close to 300 points, but this is not a very pretty sight for the Dow Jones. The last time it led to a short-term trend reversal. It gave a good bounce back, and this time, last week's trade was one which has led to this reversal of the short-term trend. Need to be a little careful. What we're seeing in the US markets is a bounce back from the last day's sharp sell-off. If this turns out to be a dead cat bounce that we know of, then there can be further weakness in the US market. So I'm just taking some cues from what's happening outside. So when I look into the behavior of the domestic sectors, the large cap stocks, the overall markets, I just want to bring in a little dash of cautiousness, especially while going long from a medium term perspective. Short-term trades, intraday long trades, please go ahead, because the markets will give us enough opportunities for short-term intraday 1 to 2 day kind of rallies. But it's the slightly larger perspective which I think maybe needs some time. Maybe from an intermediate point of view, the markets maybe requires a little bit of cool off. Cool off need not necessarily mean correction. Cool off can be in time wise also. It just consolidates the way we are seeing right now. So continue to trade, continue to keep a bullish bias, but maintain a dash of cautiousness. And in case we see a close below 17,300, then wait. Then do not be in a hurry to purchase. Wait, maybe we can, I think so, not maybe, we can easily see a drop of at least 200 to 300 points. That's only if it closes below 17,300, or else the party might as well continue on the upside. All right, let's see what's in store for us for the rest of this week. Till then, trade well, trade wise.